What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw another bullish follow through in the stock market, and there's still a lot to uncover underneath the price action. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we saw SPY going up 0.2%, and that's yet another day of SPY closing back above that 20 simple moving average. Remember, the critical support on SPY right now is the 20 simple moving average at $416. We do see the price action closing higher than yesterday's close, and we're getting very close to retesting that resistance level at 420. The other thing I want you to pay attention to is that 13 EMA starting to cross back above that 20 simple moving average, which does mean all of the moving averages are now going to be stacked to the full bull side, which means the bulls will have the benefit of the trend to push the price action higher. Now, don't get overly confident in the trend just yet, because the price action still has to stay above critical support at 416. So price action at 416 is still more critical than the trend right now. Also remember, the critical resistance above is 420, and even though we do have price targets at 423 and 429, we still need to get a closing price above 420. So don't get caught looking too far ahead, because that's exactly how you're going to get bull trapped. Focus on where the immediate price action needs to get a breakthrough, and right now that's 420. If we start breaking back down below 416, that's going to be a big warning sign that we could be rolling over and will now have a lower high situation, and will then be going back down to retest critical supports. So on a break below 416, you're looking for a retest of 412 and the 50 EMA right around 409. If 409 breaks, we're likely closing the gap below at $400. Remember that gaps typically get filled, it's just a matter of when and not if. So pay attention to the gaps below, but make sure you're not looking too far to the downside either. Remember, we need to get a price action break below 416 before we start seeing the market rolling over. I do want to also pull your eyes down here to the volume at the bottom of the screen, and you can see that we're going up on extremely low volume. There is absolutely no conviction behind the buying, and that's either a bullish indication or a bearish indication. The way that can be considered bullish is that means a lot of people are in cash right now, and they're just waiting for an opportunity to buy in, and when they finally see some sort of bullish breakout, they're going to come flying into the market, and the market's going to start screaming higher. The other situation is a bearish interpretation of low volume, and it means that no big money is buying into this market, and they're just waiting for the market to slowly drift higher until they start unloading their next position and start dumping yet again. So be cautious at these levels, and please understand that it's not overly bullish in SPY until we start breaking back above 420. So watch 420 very closely and watch 416 as the critical support. Next up is the NASDAQ 100 triple Qs, and we see the triple Qs going up 0.35% today, and yet again closing back above all the moving averages. We see the critical support level on the triple Qs at 329, and we did see the moving averages cross over to the full bull side. So just like with SPY, that means the bulls now have the benefit of the trend to help push the price action higher. So watch the price action to hold up above critical support at 329, and we also have the 50 EMA just below at 328. If we start closing below 328, that means the triple Qs are likely rolling over, and we could be coming back down to close the gaps. We have gaps below at 323 and 315, and we could be coming all the way back down to about 308 if we start breaking through these critical supports. So the most critical support levels right now are 328 and 322 on the triple Qs. Now, another thing I want you to pay attention to is the resistance levels, which are also very critical to the upside. $334.60 is a very critical resistance level. If you watched my video from the weekend, you know exactly why that level is extremely critical. If the price action starts breaking back above 334.6, that will start showing that we're likely going into a bull market scenario, and this is not just a relief rally and a larger degree correction. So remember, we still have a lower high situation on the triple Qs, and it's still completely possible, if we can't break through this resistance, that we sort of get a rollover and die effect and come all the way down to the low 300s. So treat this resistance level with the respect that it deserves, and understand down here we still have extremely low volume, just like we do on SPY. So if we start seeing large volume selling, we could easily blast through these support levels, and it will be one of those elevator down effects. I'm not trying to scare you, I'm just trying to make sure you're prepared. So watch those critical support levels very closely, because those are going to be the first indication that the price action is breaking down. If we start breaking above the critical resistance at 334.6, the next resistance levels above are 336.9 and 339. Above 339, we're going full bull on the triple Qs. We'll have the benefit of a full bull trend, and we'll have the bullish price action breakouts, and we could start heading into the mid 340s and possibly even the 350s. But remember, don't look ahead, watch the price action breakouts. To the upside, you're looking for a break above 334.6 and to the downside, you're looking for a breakdown below about 328. On the Dow Jones, we were basically flat on the day going nowhere, but we still see the Dow Jones closing back above all the moving averages and we still have the full bull trend. You can definitely see the Dow Jones is looking very weak here and it's really not getting any traction to the bull side or the bear side. Again, this is a warning sign and we see extremely low volume. This is normally what an exhausted market looks like before it rolls over and dies and we see the massive wave of selling. So even though we have the bullish price action and the bullish trending, there's still plenty of warning signs that tell you to be extremely cautious. On the Dow Jones, you want to watch the critical support level at 341.7, and below that, we're likely retesting the 50 EMA at 336. And if we break below the 50 EMA, look for the gap close at 331.6. Don't forget we have the upside gap just above, which will fill right around 347.6. We have critical resistance levels at 348 and 350. So the Dow Jones is stuck exactly between critical resistance and critical support, and we're very close to seeing if the Dow Jones is going to roll over and die or start breaking out and heading to new all-time highs. On the Russell 2000, we had the most bullish day of all, going up 1.87%. The Russell 2000 is just whipsawing around, and we see the price action closing back above all the moving averages today after just yesterday it closed below all of the moving averages. So we get a little bit of a whipsaw and we can see all of the moving averages are starting to bunch up and they're all coming to be right at the 50 EMA, right around 220.85. That's a strong confluence area of support right now, and it does mean we could be seeing the Russell 2000 making a very decisive break in either direction in the very near future. So the critical resistance on the Russell 2000 is just above around 225, and if we can break above 225, we're looking for a breakout of the resistance trend line around 229. However, downside support is also extremely critical right around that 220.85 level. If the Russell 2000 starts breaking back down, remember that it could be going into a full bear trend and we'll have all the moving averages stacked to the bear side. So the Russell 2000 is at a very critical moment where it's going to go full bull or full bear in the very near future. If we do break down, watch the critical support level at 215 and 209. On the Arkk ETF, we went up 1.87% today and we did close back above that 20 simple moving average. Remember that Arkk was in a bear market and all of the moving averages were stacked to the bear side, and today we do start seeing the 5 EMA crossing back above the 13 and the 20. However, that doesn't mean Arkk is out of the water just yet because we still have resistance at 112 and that 50 EMA resistance right around 115.7. Remember, Arkk is still in a bear market because the trend is still bearish and we're still trading below the 50 EMA. So look for strong resistance at 112 and right around 116 because if the price action fails to break above the 50 EMA, we're just very likely going to continue to downtrend and possibly try to double bottom off of 97. So this is looking like a nice rally in Arkk, but it can't be trusted until we see a return of the bull trend and a breakout back above the 50 EMA. So be patient because you don't want to be caught buying Arkk around 116 if it's coming all the way back down to 97. On the VIX, which is our fear indicator, we see the VIX going down over 7% and closing below that critical support level at 18.2. So this is actually a bullish breakout for the VIX, closing below 18.2, because remember the VIX is a measurement of fear, and this means that fear is leaving the market. If there's no fear in the market, that means we're likely going to continue to melt up to new all-time highs. However, this is only the first day breaking below that support, and we really need to see follow through tomorrow with the VIX closing back below this level yet again. You don't want to get whipsawed and you don't want to get caught in a bull trap. Right now, we need to see the VIX continuing to close below 18.2, just like we had back in April when we had that really nice bull run. So don't get FOMO and don't start rushing into everything you can find right now just because we have one day closing below this level. It's very possible this is a whipsaw and we see the VIX spiking back up. But also do know this is a bullish development and it is starting to make the markets look more bullish the longer we stay below 18. If we see the VIX spiking back into the 20s, we'll know this was likely just a bull trap and we're seeing volatility coming right back into this market. On gold, we had a relatively flat day as we continue to head higher towards our price target at 1923. Look for support right around 1876 and the 20 simple moving average at 1845. On silver, we failed to hold that breakout level above 28 and we're back below inside the resistance trendline level, holding right above support right around 27.65. Look for silver to try to break out yet again, and if it does break out, we could get a quick trip up to $29, which is our next price target. On Bitcoin, we're currently up about 1.68% and we still see Bitcoin struggling to break above that critical resistance level at $39,000. Remember, $39,000 is a very important level because it does tell us that Bitcoin is likely going to start drifting higher towards the next price targets at 43,000 and 47,000. However, struggling at this resistance level while Bitcoin is building up a bearish trend does increase the probability Bitcoin could be coming back down to 30,000 and potentially $27,000. So this is definitely a warning sign that Bitcoin is struggling to break above this level. However, if Bitcoin does break above 39,000, we could be coming up to retest the next resistance at 43,000. Remember on Bitcoin that it is in a bear market and it's going to take a lot of damage repair to get that bull trend back. Don't expect to see Bitcoin flying back to new all-time highs anytime soon. On Amazon stock, we went up 0.19% today, and we did get a second day in a row closing back above the 50 EMA. So we still have critical support right around 32.53, 32.09, and 31.38. You can see we still have Amazon trading below the 20 simple moving average, and we really want to see Amazon get back above that level. The resistance trendline level to break out above is 33.44, and if Amazon can break out of that level, it could start to run into a bull market yet again. On Tesla stock, we went up 2.39% today, and we did try to break out above that 20 simple moving average, but we did fail. Tesla does have strong resistance right around 623 to 626, and if Tesla can break above that level, we're looking for Tesla to retest the 50 EMA right around 653. Remember, Tesla's in a full bear trend, and this is a strong resistance level, so we could see Tesla getting rejected off of this level and coming back down towards support. Look for support on Tesla at 594 and 557. Below 557, we're getting bearish on Tesla and looking for it to go much lower into the 400s. On Apple stock, we were flat for the day, and we still see Apple failing to break out of that critical resistance at 128. Remember, Apple's a market moving stock, and it's in a full bear trend currently. All of the moving averages on Apple are stacked to the bear side, and the price action just can't seem to break above critical resistance at 128. So we're looking for Apple to try to break above 128 or start breaking down below support levels below at 126 and 123 and possibly heading all the way back down to 119. Remember, if Apple's heading back down to 119, that's more than likely going to pull the triple Qs down lower with it. So watch Apple's critical resistance at 128 because that will be a very early indication if the triple Qs are going into a bull market or we are just seeing a lower high situation before we go to a new lower low. On the financials, we went up 0.29% today, closed right on top of the 5 EMA, and still holding on to that bullish trend. We do see the financials in a consolidation pattern, and it could break to either direction. On the industrials, we went up 0.32% today, closing back above all the moving averages and still trying to build back up a bullish trend. We also see the industrial sector building up a consolidation, and we're looking to see which direction the industrials are going to break. On the healthcare sector, we went down 0.58% today, and we did close just above that 20 simple moving average. The healthcare sector is in a bull trend, but it does look like it's trying to roll over if it does get a price action close below that 20 simple. The energy sector went up 0.89% today and did find resistance right at that 20 simple moving average. The energy sector is losing the bullish trend, and if it breaks down below support, it could be coming back down to retest support at the 50 EMA. So going back to the S&P 500, you can definitely see strength in the sectors, but they are starting to consolidate and they are starting to look like they're weakening. That look could easily go away in a flash if we start to see the bulls stepping back in and breaking out of some of these consolidation patterns. However, it could equally break down to the downside, and you want to be patient and wait to see which direction we're going to break. So watch critical resistance on SPY at 420 and critical support at 416, and make sure you're staying objective in this market. This market does not go without risk, and I still do think there's a potential that this is all just one giant bull trap. So try not to look ahead to the upside or the downside, and be patient to see which direction this market's going to break out. We are seeing the VIX heading lower, which is ultimately going to be a bullish indication, but we still don't want to get whipsawed at these levels. Remember, on the Stocks Channel Discord, I'm doing intraday updates and analysis to help you navigate this market and stay on the right side of the trade. I'm also bringing new trade ideas to you weekly to help you crush this market. If you're interested in joining the Stocks Channel Discord, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.